Hey everyone, thanks for joining me on another episode of Data Driven Value, where we give you the tools and the knowledge to help you take your financial freedom into your own hands. My name is Mark, and without further ado, we'll jump right into the chart. So we'll just take a little look at kind of what's going on in the TradFi markets right now. So obviously, again, another green day, looking good kind of for all the indices. Bitcoin obviously pumping, breaking out a bit there. Ethereum lagging a little bit, but there are some altcoins that are performing quite well. We'll take a look at those later. But we can kind of take a look here at the SPY and kind of see what's going on here. So we've basically kind of just been riding up in this channel. Essentially, since the great financial crisis, we have had a handful of dips along the way, generally kind of between 20 and 30%. Almost every 4 years, it seems to be there is at least a 20 to 30% correction in the S&P. So we can see the major corrections obviously lining up here with the great financial crisis where it bottomed out. That was actually about a 55% correction. So quite a bit bigger than what we've seen kind of in recent price action through here. And then also we've got our COVID crash right here. So yeah, quick V-shaped recovery. Obviously, if we were to experience some kind of crash in the near term, I'm not expecting a similar reaction that we had here, just because I doubt that we're going to be kind of implementing the same stimulus measures that were put in place in COVID, and then just allowing the markets to rally really quick to that inflow of excess capital. But then we saw also we had our dip here, kind of 2021 to 2022 bear market. We did see a decent little correction there in the S&P, offered great buying opportunities. So kind of, yeah, 25, 30%. And then we've just kind of continued up from there. But just interesting to note that we are seeing a slight bearish divergence on the RSI and the price here on the weekly chart. So doesn't need to play out immediately, but may just be due for a little bit of pullback. We can kind of see here, generally, yeah, we've just been trending up, and then we do get these little retracements. So for the most part, they're just little 5, 10 retracements kind of along the way. And then we have our kind of worst case black swan recession retracements. Those are generally 20 to 30%. So I like to always have a cash position for that potential outcome, because none of us can accurately predict the future. There are enough worrying economic factors out there, I think, to warrant being prepared for that kind of scenario. But at the same time, there is also enough bullish factors kind of to also hedge ourselves in the near term and look for some shorter term trades. But really, to manage our risk, yeah, we're focusing kind of our shorter term, maybe less risky trades around here, but saving kind of more capital in the event that we do get a larger retracement. We really want to take advantage of those. Those dips kind of only come, as you can see, so here, 2008. So basically, to get the same kind of buying opportunity you got in the great financial crisis, you would have either had to kind of snipe that COVID drop, which would have been very hard. Nobody really knew what the eventual outcome was going to be of this. Kind of everyone just expecting a whole world shutdown. Luckily, the stimulus did kind of come in and help us recover those losses. Unfortunately, though, the stimulus kind of also had a negative effect in terms of inflation. So we have seen kind of inflation upticking a tiny bit. Luckily, the core inflation is still coming in below estimates, so the markets are reacting positively. But kind of for general inflation, it's getting pretty sticky right around that 3% mark. And with the Fed target kind of at that 2%, as well as the unemployment numbers, the Fed just doesn't really have any need to continue cutting for now. Yeah, as long as the labor market's looking the way it is and inflation's looking the way it is, I would expect we're kind of going to hold the rates where they are for the time being. We could maybe see some more dovish language as we get a new administration in, but that's kind of just speculation based off of what the Fed has told us so far and what the numbers are saying. I'm kind of leaning towards that we just might be due, yeah, for a bit more of that sideways or one of those like healthy kind of corrections here. So we can zoom in just to a lower time frame to get a look at the potential outcomes. So if we look at the lowest time frame, this is going to be the highest risk potential play here. So we are looking at the SPY. RSI on the 1 hour is pretty high, not too overbought yet, but just good to keep an eye on that. take a look at our big money buy indicator, and we'll also pull up our MACD. So looking here, again, MACD also kind of overbought there. And then if we zoom in, see, yeah, we are getting some decent little buys kind of through here on these lows. So nice to see buyers kind of stepping in, kind of similar to what we saw here. They were able to buy these lows, and then here they're accumulating these lows. So good to see there are some buyers kind of stepping in. What I do want to see, we are in kind of a low time frame downtrend right now. So I'll mark that here. We're just looking, kind of came up, we topped here, and then we kind of reversed our higher low and higher high structure. So like here, we're now in that kind of lower high, lower low, lower high, lower low. So until we break this structure, so that'll be initially kind of taking out this high right here, we want to kind of get above this and then start printing those higher lows. And then yeah, once we have 3 or more kind of higher highs and higher lows, we can start to assume that we might be in what's a trend change or kind of a bottoming structure, but really kind of waiting for that confirmation of trend before we're taking any positions here. Just because if we do reject from here, then to me, that's just signals continued downtrend because we weren't able to break this high. And then we're likely going to come back, obviously, retest some lower support levels, and then maybe try to print some bottom structure from there. So if you were looking for a very short-term kind of swing trade on the S&P, and you were bullish, you believe kind of the market's going to trend up, I do believe we're due for a little bit of a retracement. So let's pull this Fibonacci kind of there. Generally, yeah, looking in this daily gap fill, and then there's a bit of confluence here with the 618 and 0.5 Fibonacci zone. So looking at that from obviously this swing low to this swing high. So yeah, there is a little confluence of support there. We do have this gap fill. Lots of times these are actually filled. If we go to the daily chart, yeah, just looking at it like there, just looking for that kind of Fibonacci retracement. Ideally, yeah, we want to break this high, and then that's when we want to enter this position because we kind of have more chance of a continued uptrend afterwards. So if I were looking to actually kind of trade this myself, I might look at taking kind of a long position right here in that gap fill and confluence. My stop loss, I would have just kind of under these, at least under these lows. If you could put them under these lows and stomach that kind of a little bit more of a drop, then you'll just be more protected. You have all this support here, and then you'll be less likely to kind of get stopped out of your trade. But that's a good place for a stop loss right there. And then ultimately we would just hold this and kind of see where the market takes us. If we do continue our uptrend, then I would likely move my stop loss to entry once I'm kind of cleared of this zone here, and then I would just protect from any downside. But that's just kind of a short-term riskier trade. Obviously, we can kind of see here on the daily, the MACD is just flipped green. We have a bullish cross. We did get a bullish cross on the RSI. It's moving up, but it's still kind of in that neutral territory. So we do have enough momentum, I think, to be able to take out these highs here. It's really just going to depend how we do on that low time frame. Again, RSI looks good, not too overheated, so room to run on the 4-hour as well. So kind of looking for something maybe like this. Maybe we go up, retest the all-time highs here. We come back, kind of test our support zone here, and then maybe we continue higher. Don't really have an end target for this move right now. It's kind of just to play momentum. So we just look for a bit of an entry there. Obviously, stop loss to protect it if you are worried about the downside, and then just seeing where the market takes us from there. So next potential play I'm kind of looking at, this is a higher time frame, kind of a more bearish case scenario. We see this zone that we have down here. This is another Fibonacci support zone right down here. And if we were, this would be kind of like just a normal 20%, not normal, but our 20% kind of scare correction. So not a full-blown recession or a black swan event, or maybe a black swan event, little news event just pushes us back kind of to this level. but I could see us coming back kind of, yeah, to the 490, maybe up to about 510 level. If we do go there, I'm definitely going to be looking at accumulating some more SPY. And then we also have our kind of worst case scenario, full-on recession type drop. So that would be from the peak to the lows would be roughly 26 to about 35%. So in line with prior recessions, also coincides with a Fibonacci levels. So good support right there. And we have this long upsloping trend line dating back to 2008. So yeah, definitely a few different options there with the SPY. I am a little worried kind of here. Hopefully we're able, maybe we can, if we can take out these highs, then all bets are off the table and we can just continue on our merry way, as some people like to say, climbing the wall of worry. As I mentioned, there are enough worrying economic factors, but at the same time, I do believe there might be enough bullish catalysts to kind of let us continue this run for the next couple quarters, maybe a few quarters, and then ultimately we will need to undergo some kind of flush of capital just to kind of build support in these levels. But generally, S&P is going to keep trending up. So yeah, we're taking advantage of the opportunities we see. We've got our short-term opportunity as well as we've got our accumulation opportunities down here. Moving on quickly, so we'll take a look. First, we'll take a look at our crypto heat map. Yeah, obviously everything kind of green across the board for the day except for a few. Interesting to see XRP. We did see H bar was red, but it looks like they might have flipped green, or they're just less red now. But, oh no, there they are, H bar, my mistake. So yeah, XRP and H bar, two of the best performers, kind of on that recent America Crypto First speculation. We are seeing them red today. XRP down a good 3.8%. That's totally normal. XRP went on a monster run from about 50 cents up to about 326, 330, kind of in that range. So not surprised to see it coming down there. We'll take a closer look. Well, we'll take a look at Bitcoin first. So yeah, Bitcoin breaking out on the low time frame. Nice support from this trend line dating back to the prior all-time highs, or prior cycle all-time highs. I do want to take a look at another trend line that I identified kind of dating back to even the prior cycle. Let's just go here. So switch to the weekly chart. And then we will look here. So I'm just going to get rid of some of my drawings here. And then we'll drag this out. So just a quick look from the 2017 bull run peak off our peaks from the prior bull run to the current high. It's just going to give us a bit of an estimate of where we might find the kind of next resistance of this move, but looking good. So essentially, we're kind of seeing resistance. If we can break this all-time high of 108,000, then I might be looking kind of between 115,000 and yeah, that 108,500 level. So maybe some resistance right there if we are able to break out of that move. One thing to keep in mind, we are still extended on a Fibonacci basis from this candle here to the high. So I've just got those areas marked. I always keep those in mind as potential accumulation zones. So then I'll mark the 0.5, the 618, and the 786. Kind of see here. Oh, so we got, yeah, 69, 78, 83. Those are going to be the three levels I'm looking to accumulate Bitcoin on a DCA and, or not DCA, on an accumulation and cycle hold basis. So long-term high conviction buys kind of here. And the reason for that is kind of similar to what we saw on this breakout here. We came back kind of in this consolidation, and then we're going to tag this 0.5, retesting lower support and then continuing up. So we have that kind of drawn out here. If we do see that play out, we're definitely going to want to be accumulating kind of anything under that 85,000 mark and then down to about 70,000. We do have quite a bit of confluence kind of here of support from the prior cycle highs. We can actually mark that there. So if we take this, drag it out. So lots of support through here. We also have this upsloping trend line, kind of worst case. So if we were to kind of go through a sideways consolidation down to this zone, by the time it plays out, we might actually hit kind of the confluence of these support zones. But just interesting to know. Yeah, keeping our eye on that as well. That is our high time frame accumulation opportunities. We'll zoom in now quick to the low time frame, look at the 4-hour chart and see what's going on. We will get rid of our one upsloping trend line just to kind of get a better view. And we'll get rid of that for now as well. So looking here, obviously RSI getting into that overbought zone, as well as the MACD quite overbought. But we did break this high here, so we do have the chance to kind of continue this uptrend structure with another higher low. Interesting, and again, here, nice clean breakout, continuing higher. We do have a lot of support through here, and then also down to the bottom here. So yeah, again, that kind of coincides, the bottom of this support coincides a little bit with our 0.5 Fibonacci level on the high time frame, but we can see anywhere kind of in this region right here, we have pretty good support. So if we're looking there and we want to build kind of a shorter term swing position, we might just break back down below this support, in which case on a swing basis you're probably looking at adding kind of between 89 and 92, building a position there. That's where I last added to my swing position, down in that level. Yeah, we will watch just to see where this tops out at. Ideally, yeah, we can break the highs. So we have our highs here. Yeah, highs there. So we want to break these highs, and then yeah, we want to come back, kind of retest this down sloping trend line as support, bouncing, putting in that higher low, and then we're able to continue higher. If we are able to continue higher, again, my first guess would be kind of resistance between 110 and 115,000. And then if we're able to actually break out beyond that, my target would be kind of the mid 120,000s. And that's actually the measured move for the high time frame cup and handle breakout that we've witnessed in Bitcoin right now. So looking here, we've got our cup, we've got our handle, we've broken out, and the measured move target is actually right there in the mid 120s. So I'd be looking for a move kind of there. If we do see a quick move up to those mid 120s, I'd be a little worried we might kind of be leaning more towards that left translated cycle, just meaning that the price actions played out a lot more quicker than prior cycles. Generally, obviously, the right translated cycle would mean the peak is kind of occurring over here further in the year, or similar to prior cycles. Otherwise, left translated peak, just kind of we go up a lot faster than we really expected. Don't really have the same kind of support that we've built, and then we get a bit of blow off top. In the near term, it would present probably a good buying opportunity, but it might be a pretty tough move for some investors to stomach. So just keeping that in our minds, depending where the price goes next, we'll just see, and then we'll take our entries as they come. Looking at ETH, ETH's again kind of been underperforming still, been kind of a lagger this whole cycle, unfortunately. I'm sure everyone expected better performance from ETH. I expected it for sure, kind of with the ETF approval. But I do believe ETH is going to have its day this cycle. Like, it's got the ETF. It definitely has the selling point for institutional yield earning, especially if we get the new administration with more favorable regulation. I do believe big money, there is a big incentive for them to get involved in Ethereum just to earn that yield, either through staking or through DeFi. Obviously, banks want to earn as much yield as they can, but they want to do it on the least risky terms. So they're not going to be buying and staking any like little altcoins. They're generally probably going to stick with Bitcoin and Ethereum for the most part. They might kind of diversify into some of the larger altcoins like Solana and XRP, as we've kind of seen some speculation with that crypto first reserve. But I do think Ethereum is still the king of the space. I think when we do have a proper mania phase that Ethereum will outperform, but I do not believe we are at that mania phase. We can kind of come here, and again on ITC, I referenced this before, we have our crypto risk indicator, so we see the social risk here is actually pretty low. yeah, not a lot of new people watching the space. So yeah, once we see this social metric start going up, we're going to see a lot of new investors entering this space, and obviously they're going to be looking for the best risk return. Lots of the times they kind of lean towards the more available, more widely known cryptos. So you might see some of the kind of the older coins that have been around for a while, and then especially like Ethereum, they're definitely kind of going to outperform in that little stage of the market. I kind of believe now a lot of smaller altcoins are doing very well just because most people kind of in the market right now are pretty seasoned crypto investors. So kind of know what we're doing. We're not really interested in ETH because the returns, for a degen, ETH returns are nothing. But for an average investor, the returns on ETH can be very amazing. So interesting to just kind of follow that. Make sure, obviously, yeah, we're not getting too much influx of new investors yet, which makes me believe that we aren't even near kind of the cycle top. We could be due for a local top, but usually that cycle top coincides with a very overheated social risk metric. So we'll keep an eye on that. But here looking at ETH, obviously we took our last swing position kind of sub 3,000, targeting down to that 2750. We did see it come back there, so I will keep this zone open. If we come back here, I may add a little bit more of ETH down there. But we'll take a little bit of a closer look on the low time frame. So here, yeah, we've got obviously not looking good price action wise. We kind of were not really able to take out these highs here, losing momentum. We got a lower high on the RSI, curling back down. We've got the MACD quite overbought, also kind of curling back down. Likely just probably again kind of going to come back and maybe retest this level down here. So we may in the near term see that opportunity to add to a swing position on ETH. But alternatively, if we do see that broader market breakdown kind of that I spoke about, we're going to be looking at lower support levels. So you might be looking kind of down here more towards 2,000 up to 2,300 would be our next level for ETH. And then, yeah, we kind of do have that confluence of support and resistance coming all the way back to the prior cycle, all through here. So first target, 2,750 to 3,000, slightly higher risk. And then second target, 2,000 to 2,300 would be our next level that we want to buy at. And then I would probably even just look at buying maybe just right down through here as my final accumulation. Not my base case again. Maybe we'll just drag it up to pull in that support. But if we do see a $1,500 to $1,000 ETH, I think you'd be crazy not to be a buyer here, unless we're in a recession and we're going through a total market meltdown. But yeah, so first thing, 3,000 to 2,750. Next up, we've got 2,000 to 2,300. And then last, our 1,500 down to 1,000 accumulation level. We can also see here, yeah, all the major indices green across the board. Gold, a little red on the day. However, it is in a technical uptrend and it is breaking out on the low time frame. So interesting to note there. Gold, typically a risk-off asset, breaking out on the low time frame. We do see the RSI curling back up. So it could break out of this resistance here, retest it, and keep continuing higher. We will keep our eye on that. Also looking at the dollar, we do see on the low time frame, the MACD has flipped green with that bullish cross. The RSI printed that higher low and it's continuing higher. We are in a technical uptrend on the dollar as well. So interesting to see that Bitcoin, gold, and the dollar are all kind of breaking out of their respective low time frame downtrends. And then yeah, so we'll just look at that to maybe look for a potential near-term top. So then here, yeah, same thing on the daily too. Looking good on the indicators. So we definitely could push higher for the DXY. It usually does have a negative effect on risk assets, but obviously we can see here Bitcoin hasn't really cared that the dollar has been rallying. I think mostly due to the strength based around the incoming administration. So looking here, we'll just take a look at a potential top. So yeah, we do have bottom kind of structure here. We were able to reverse. We got our uptrend, still in that technical uptrend. We've got resistance between the 618 and 786 from this high to this low here. And then lastly, we've also got our double top scenario. So it's still a bit of room for the DXY to run up and print a top. We'll just be watching that one. We'll jump into our miners really quick. Obviously, WGMI up 5.69%. I highlighted this one in previous videos. We were buying, again, the Fibonacci golden retracement. We see the weekly MACD flipped green. We've got our bullish, or the daily MACD flipped green. We've got our bullish cross. We're heading back up. Again, we want to see us take out these highs, print that higher low, and keep continuing upward. But we're looking pretty good, bouncing, let's see here, 21, 22% or so to the high from the lows here. So nice little reaction from miners. I kind of expected that, similar to all the other Fibonacci retracements that I've pointed out previously. Obviously, Mara's doing good, doing best for the day, kind of up 10%. We got Riot, Clean Spark, Iris Energy 7.5, obviously, yeah. So miners kind of varied performance across the board. Yeah, looking anywhere from 3 to 10%. So if you want to check out some of the accumulation buy levels that I charted for miners, you can look in the prior videos. Otherwise, we'll just keep kind of going through the charts here. So looking at MicroStrategy, again, this is another one I kind of highlighted today. We've got our daily MACD flipping green, bullish cross, RSI bouncing off the moving average, and then we've got this downtrend breakout, and we're sitting above the volume shelf. So really good move for MicroStrategy. I'm kind of expecting something like this. And then again, our goal is going to be to enter on that retest there. So yeah, wait to see where it tops out, pull that Fibonacci, enter in the golden zone, and then ultimately hopefully ride this back to the highs. There is quite a bit of resistance there in order blocks, so we do have a lot of people looking to take profits in MicroStrategy up here. So I think we may just be due, we might come up here, attack this, get rejected, but if we continue that uptrend structure, then I'm just going to look to keep adding on those higher lows and keep riding momentum until the top of the bull market. Alternatively, though, we do have kind of a breakdown scenario. We might see a revisit back to this sub 285 level where this gap fill is. So if we go there, you might look at adding a little bit. Next support, I'm looking at kind of below that 210 range. And then finally, we've got a Lux Algo order block down here between 100 and 100 and about 115. So looking at kind of splitting our buys up through these different levels. Obviously, this would be the highest risk and shortest term swing potential. I wouldn't take this trade unless, yeah, you honestly believe that the market is going to continue up. The structure looks good. So yeah, as long as we see that higher low printing and our momentum indicators look good on the low time frames, then I think MicroStrategy does have a good chance of continuing kind of up into these resistance levels. Looking now over at crypto. We'll take a look at our ETH Bitcoin chart first, kind of seeing let's go on the daily, yeah, RSI pretty low down here, MACD a little low, not as oversold as it has been, but we can see we're coming back down into this support zone right here. We do have the cycle low sitting just below 0.032. So kind of looking for a double bottom type scenario on this pair. Yeah, ETH Bitcoin's just not been performing that well lately. I think, yeah, there's a lot of hype around the merge and basically just bled since then. Yeah, we really want to see this print some bottom structure. So it's had a couple attempts at doing that, and ultimately they just kind of break down and we just resume our downtrend. So really just wanting to see ETH Bitcoin print that bottom reversal structure, and then we can likely look at alts kind of starting to go on a broad outperformance. So there will be some alts that are going to outperform ETH going forward. They don't necessarily have to wait for ETH Bitcoin to bottom, but the general concept is that until ETH Bitcoin has bottomed, that the overall market or the overall altcoin market can't durably outperform, because a lot of them are very tied to Ethereum and the DeFi activities on Ethereum. But We already looked at that. So just watching that for a double bottom type scenario. Ideally, yeah, we want to see some strength in this support zone here. Obviously, looking at Bitcoin dominance, kind of approaching this wedge. We did print, I guess we got the lower high. We did get a higher low, but we have a lower high here. However, this is could be argued it's just a bit of a bull flag structure on the lower time frame. And so until we get a bit of a breakdown from here, this still looks good. RSI is curling back up. Let's look at the low time frame. Again, so yeah, 4-hour RSI, bullish cross, or 4-hour MACD, bullish cross, green histogram. We did lose this low here, so keep an eye on this. If we come and get rejected up here, then we might again just be due for that low time frame continued downtrend. That would be most ideal for alts. Yeah, we need this to break down before we start seeing alts actually durably outperform as a whole. So your two things you're essentially going to be watching for is a rejection from here, lower low, another lower high, and then likely that's going to signal obviously continued downtrend, and then we might start to look to position ourselves in alts if this looks like it's going to be the most probable move. Otherwise, if we do see it break out of here into resistance, come back, retest that, and then the momentum indicators show that it does have room to continue this run upwards, then we might actually kind of be due for that final topping move in dominance. Essentially, we would be looking at a kind of lower, slightly lower high scenario right through here. But yeah, we want to see dominance start to break down before we can start to see alts as a majority start to outperform. I looked at USD, obviously total 3 USD, so total market cap excluding Bitcoin and ETH. So altcoins, generally big altcoins, right into resistance. We'll see how it kind of reacts off here. Yeah, we have our Fibonacci level. If it were to retrace that amount, then we would actually be looking like we're breaking back into this consolidation phase. So watching that. Others dominance, again, kind of still in that wedge. If we zoom into the 4-hour, we could see that, yeah, our RSI is kind of a bearish cross there coming back down. We did get rejected kind of close to the top of that trend line. And MACD also looks like it's curling back towards a bearish cross. So other dominance could be heading kind of back to the bottom of this channel, more consolidation to do. So we'll take a quick look here at a few coins. I want to look at Stay. Stay is one I am currently watching. I don't have any trade open on it right now. If we take a look at it on the weekly, let's see here. So we essentially see couple levels here. We had this major buy order block here, and then we also have a large sell order block for Say up here. We saw price on the initial rally of the bull market from low to high, came back, kind of consolidated right below that 786 Fibonacci, broke out. We're coming back now, and again we've retested that 786. Looks to be bouncing from it, holding that higher low right there. So it looks pretty good on the weekly chart. Yeah, kind of sitting in that golden zone. So if you did believe that the market was going to continue up for the remainder of the cycle, we were done with all the downside. You think alt season's on the way. I actually kind of like Say. It's just one I'm just going to watch for a little bit. I'm not going to take any entries yet. So zoom kind of into the low time frame as well. See if we can't get a better idea. So yeah, same thing on that low time frame. We're actually, again, coming into resistance, and it looks like we're getting rejected with a slowdown of our momentum indicators. So we're probably likely going to come back and then retest maybe this zone down here. So watching Say for that potential opportunity. And then again, we're going to look for another higher low. So we want to keep that uptrend structure. Something like this, maybe. We come back here, we test it, and we keep going up. Alternatively, we could come back down to this zone and hold it as well. But yeah, just keeping an eye on Say. and looking for the most probable potential entry. Kind of the other reason I'm watching, say, right now on the Bitcoin pair, we are at a macro support level. So we see obviously the Lux Algo order block. Our RSI is quite oversold back down here. Yeah, we've got our up sloping, so high or low on the RSI, and then we've actually got a almost double bottom type scenario, and then we've got some more support for the, say, Bitcoin pair down here. But yeah, looking to see how this performs as well. Same thing as with other charts. We're just going to wait for kind of that reversal of structure. But yeah, it's a good thing to see a double bottom print on the Bitcoin pair. This means we might be due for a period of outperformance. Maybe we just go back up to that resistance up here. Even from current price, if that were to occur to the lower band, say would outperform Bitcoin by about 120%. So that's kind of why we watch the Bitcoin pair. Helps us kind of gauge which alts may have bottomed against Bitcoin. And then theoretically, we want to position ourselves in the alts that are going to go on to outperform Bitcoin. So looking at Brett as well, I kind of had a couple scenarios drawn out here. We'll go on the daily chart first. Yeah, obviously here, so the initial rally kind of the bull market, we came back, consolidated in that golden zone, broke out, had our second rally. Again, we've come back and we're consolidating in that golden zone. So similar price action to here. We do have the order block a little bit lower, so I do keep that in mind. This is my bullish case scenario in the near term, and then this is my bearish case scenario. So if we see the breakout do trigger, I figure we just let it top out again, pull that Fibonacci and look for that low time frame entry, and then ultimately try to ride that reversal up. Otherwise, we might just see, again, more consolidation back down to these lower levels, and then we might get our breakout then before we're able to kind of reverse structure. Looking at XRP, obviously looks a little toppy, so we've pulled our Fibonacci. Yeah, pull the fib, and then we obviously have confluence here of horizontal support. So looking for an entry in XRP from about 275 down to about 255, something like that. So virtual is another one I was watching. So this one's been really hot. AI agents seem like they're going to be a huge thing kind of going forward. I don't know how sustainable the hype is. As anyone who's been here for the cycle so far, it seems like there's a new flavor of the week every kind of week. So originally all the AI hype was around like render and AIOZ and this and that. And now it seems AI agents seem to be the new meta. So new kind of hype going on right there. Went on this insane run, finally gave an entry in that 618, and then broke out of the downtrend, had another big breakout. So we're looking for our entry kind of in, again, we want to aim ideally in the golden zone. If you want to take a bit of a higher risk entry, again, and you believe that alts will go on to outperform, then this is an option up here on the 0.5. Virtuals has shown a lot of strength, so if we do get a reversal for altcoins, I wouldn't be surprised to see it bounce from this level. But again, as a technical, or from a technical standpoint, I save my larger buys for the golden zone always. Yeah, moving on, we got SHIB outperforming today, doing really well actually, but also just kind of coming into resistance. Looks to be rejecting a little bit. RSI a little overheated, might be due again for that downward pressure. We've got Fetch AI. Again, another kind of bearish approach on the RSI there. We take a look. We are in a bit of a downtrend, just getting rejected by resistance there. Yeah, so a lot of alts right now are kind of just coming into resistance. There are some that are breaking out of their downtrends, but see here like the difference between Fetch and the difference between like SHIB. Obviously, we see this downtrend being convincingly broken, whereas in Fetch, it's actually just getting rejected here. Ideally, this is stronger price action, and then it signals like, yeah, the breakout, and then that's when we want that higher low to and get in on that for continuation. But A lot of the charts look very similar, so I'm not going to go into all of the individual charts. If you do have specific requests, you can drop them in the comments, and I will include them in the next video. Other than that, that's been a little market update, kind of covering some alts, covering the SPY as well as Bitcoin, ETH, and their respective dominance. If you enjoyed the content or you found anything of use, you learned something new, please like, subscribe, share it with your friends. Everything you do helps immensely. I do this all for you guys, and I'm really excited for the future of this channel. So thank you for watching, and I'll see you next time, guys. Bye.